Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes on Monday, the 30th of November here on Share Talk. Starting off with Alpha Growth, where a bit of jiggery-pokery just around the initial November resistance of 1.66 pence, but at least while we're above that on an end-of-day close basis, and especially while we're still well above the 200-day moving average of 1.57, we should see the top of the broadening triangle from July heading up to 2.4 pence, obviously retesting that month's resistance. Only sustained price action back below the 200-day line, really delaying the upside scenario over the next month or so. On to Anglesey Mining, where I've sort of upgraded the situation here. I think we're looking for about 3.5p before as a target. But it looks like the shares are within a rising trend channel from the end of February, and at least while we're above 3 pence on an end-of-day close, maybe to allow down to 2.8, which was August and October resistance, we should hit that top of the channel there from February up to 4.5 pence, hopefully well before the end of next month. On to a stock which gets sporadic coverage here, but it's back again now at the moment. Beowulf Mining. End of day close above the 50-day moving average, and that October resistance line at 5.15 pence should be enough to give us a retest of last month's resistance at 7 pence over the next week or two, and hopefully as a best case scenario target over the next 4 to 6 weeks up to 9 pence, which is the top of that rising trend channel from September last year. Stop loss at this stage, I suppose, back below the 20-day line at 4.6 pence. ECR Minerals, a bit of a slow mover until now, but looks like it's finally starting to pick up. Didn't help that we had a extended bear trap below the October floor of 1.9 pence when I think we went down to well below that level. What's that, sort of 1.7, something like that, before the rebound. The current view is that we've broken the October resistance line and the 50-day moving average at 2.05 pence, and above that particular combination, looking towards the February resistance line projection as high as 3.25 pence, hopefully by the end of next month. On to a rather larger company, Greatland Gold, which has had some news out today. Nice consolidation here with this extended, I suppose extended bull flag really, but what we've got is a line of resistance there from June, and that's currently pointing as high as, what's that, nearly 38 pence. We were looking for that before, but looks like we've got another chance now, especially while we're above this broken line of resistance from September, call that 23 pence, above 23 pence, looking up to 38 pence for Greatland Gold, and hopefully that is over the next, well, it might be as soon as the end of December, but maybe going into January for that particular target there. But it looks as though the consolidation that we've had since September finally over on that particular situation. On to IQE, which was just requested today, and I'm quite grateful for that request because we've just broken that line of resistance there from November last year. That was around the 65, 66 pence level, call it 66 pence. While there's no end of day close back below that, we could be heading towards the top of the rising February trend channel, wide channel there, as high as £1.05, hopefully over the next 1 to 2 months. But looks quite significant there, especially with all the near-term moving averages rising, even the 200-day line starting to tick up there as well. Rather a more obscure situation next, which might be jumping the gun, but thought I'd mention it anyway. Location Sciences Group. Here we've had a little break through the 50-day moving average and through the September resistance line there at 0.47 pence. End of day close above that today, and hopefully this week should open up the prospect of an August resistance line projection target as high as 0.8 pence. Effectively retesting July resistance there, but it looks like a reasonably good risk-reward trade on the basis that we've broken through the 50-day line and we're going to stay above it. On to Macango, which is starting to heat up quite nicely. Lots of following on Twitter anyway, but the technicals looking very sound now. A bit like the Greatland situation, that we had an extended consolidation now the breakout, and the view here is that at least while we're above October, November resistance, that's around the 11.5 pence level. we could head as high as the top of the rising trend channel from back in March 2019, March last year, and that's currently pointing as high as 21 or even 22 pence on a 1 to 2 month view. Maybe 4 to 6 weeks is probably the right time frame there, while we're above the 11.5 pence zone. Good news today from Oracle Power, where this sort of the expiration is getting underway. Shares flicked up towards 0.67, but we're still looking for really an end of day close at least above the 50-day moving average of 0.64. Ideally the 200-day line at 0.71. We've got a line of resistance there from September as well, around the mid 0.6s, so take your pick in terms of what the trigger may be, but the 50-day line probably the best one at 0.64. If we can get through that relatively quickly, then the target here is 1.2 pence plus to retest post December resistance there on the daily chart. Stop loss obviously back below 0.55 at this stage. On to a stock which is already doing the business for the bulls. Comes in the form of Ormond Mining. Nice rebound, bear trap rebound off the 50-day moving average, the rising one, so that was a positive indicator there. And while we're above the initial November resistance, and that's at 1.52 on an end-of-day close basis, looking towards the top of the September rising trend channel at 2.5 pence as soon as the end of next month, and perhaps even sooner, the way things are going at the moment. Stock which rather knocked the wind out of the sails of the bulls last week with the placing, but it looks like it's back. Interesting that we've had green candles even on the down day, which is in the wake of the placing. So that is showing that we're looking at a pretty strong type of charting pattern there. 10 pence or 11 pence was the initial target there at the top of the October resistance, the October price channel. But I think we can upgrade that now with the green candles that we've seen towards the top of the rising trend channel from the middle of last year, currently pointing as high as 14 pence. 14 pence target valid while we hold above the initial November resistance at 7.25 pence, above 7.25, looking for 14, hopefully by the end of the year, maybe going into January if we get slightly delayed. Finishing off with another stock which has delivered decent news today, Wishbone Gold, punched up to 12 pence today, gapped. Shares also gapped up as well, but while we're above Friday's high at 9.9 pence on an end-of-day close basis, looking towards the top of that rising trend channel from August as high as 16 pence. But it does seem as though the initial resistance there is at 12 pence, so really that 12 pence is the level to break, and after that the shares could actually go rather higher than the 16 pence level. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.